Right, welcome to my YouTube channel, Elektronfx Academy. Right, this is the official YouTube channel for the Elektronfx Academy. Right, we are an institution that is um, designed to train traders, educate traders on the profitable approach to trading. Right, so we have been in the market for quite a number of period, and we have experienced the downs and the ups, or the ups and the downs of the market, and then we have put together a strategic approach, right, to tackling the markets, right. We put this up in order to be devoid of mistakes. We try as much as possible to eliminate wrong and false information, because one painful thing about the trading community is that there's a lot of wrong information, right? People go online and see all kinds of funny stuff, ranging from the use of indicators to support and resistance and any of that, right? So that is why we are existing, to give you the right information, the things that actually work, right? The things that actually work. All right, so welcome once again. If you are just joining, please do want to hit the subscribe button and like this video so you can see more contents from us. And do not forget to join our Telegram channel to have more information about us, right? So let's go straight into the business of the day, right? So talking about the smart money crypto, right? So I will define smart money cubes, and then I will show you illustrations on how to trade them, and then we go into the live trade, right? So smart money cubes, right, are other blocks, right? So the other blocks created, right, by banks or institutions, right, or institutions, right, when they, right, fail to take rise their direction, right? I will explain this, right? So that blocks are created by banks and institutions when they fail to take price their direction, right? So smart money cubes are other blocks created by banks or institutions as hedge funds and all of that when they fail to take price their direction. That means if they were trying to buy, let's assume that maybe this was a bearish market, right? So, and at this point here, maybe a bank or institution was trying to buy here, right? And maybe it took price up a bit. Maybe you see that little small move for the market to continue going down, right? What has been created here is what we call the smart money cube, right? So you usually find it by maybe a kind of small candle and all of that. You usually find a kind of small candle. Let me make that blue. But this was a bearish market, so it could be blue, fill with color blue, right? Maybe you can find a small blue candle, right, before price continues to go all the way down. So this small buy push up, it's what we call the smart money cube, right? It also happens in a bullish situation, right? So the market is going higher, so you're having markets going up, and then at this point here, the market was buying. Then at this point here, you are able to spot what's a little small candle that was pushed to the downside. Let's make it red as well, so you can understand, right? So you see that small bearish candle, right? We usually signify bearish candle by a red candle, so let's make that red. All right, so you find a small sell candle, right, before the market continues to rally up. That means what happened there was that the market came here, all right, so the market sold down a bit, right, gave a little sell, and then continue to rally up, right? So this small sell candle created here is what we call an order block. It's when an institution or a bank fail to take price their direction. That means they try to sell here, but they were unable to sell, right? And then the price continued exploding in the other direction, right? So I'll teach you the relevance of this as we progress, right? So when smart money cubes are created, what happens is that the candle or the move, right, signifies or represents that they are actual in drawdown. That means when these candles are printed, it means that the smart money, right, they are actual in drawdown. That means this buy position is in loss, right? Maybe let's assume that they got into this policy, maybe 50 lots, and maybe they bought here with 50 lots, right? So 50 lots were inputted at this point here. And let's make that smaller. So let's assume that the 50 lots were introduced at that point there 50 lots. They tried to buy with 50 lots, and then they could not take price higher. Price continue going down. That means this 50 lots is actually in drawdown, right? And it will be a loss of hundreds to millions of dollars, right? So what do? They do this. They have to buy back, right? When they notice that they were not able to take price lower, when they notice that maybe the sell pressure has gone down, they could now come at this lower point and maybe buy this time with 100 lots, right? So when they buy with 100 lots at this point here, they since there's no more maybe the sellers or the other banks, banks are always trading against themselves, right? Institutions are always trading against themselves. So maybe the bank A bought here and could not take price lower, price continued going lower, and then at this point, bank B and other banks have closed their positions. So this position is still in loss. So what do? They have to now do what? Buy back into this candle, right? They have to buy into this candle to do what? To close the orders, and that's what we call mitigation, right? Mitigation simply means when a huge order that is in drawdown or in loss, or huge orders are closed out of, partial out of, and all of that, right? That's what mitigation means. When price comes to an area of interest and then comes into the candle to close positions, to add positions, or to break even, all right? So when this place is in drawdown, they can't leave their loss running. So they have to buy back into this zone, right? When they buy into this zone, they're actually at break even. Now that means the loss, the billions or the hundreds of thousands of dollars loss would have obviously gone to zero as break even. So they break even at this point here, and then they go lower, right? So when that happens, you see the markets go lower, right? So, or they could actually push price a bit into the candle. That means they may call maybe 50% of this buy so that at least they can close a little profit, because they could be greedy at times. So they could actually not close at the open, maybe at break even. They have to allow it to run into profits, right? Maybe run into some profits. Maybe that's gone into half of profits they were expecting, and then what happened? They now close. And when they close here, what do? This position is now off the market, and what do they do now? They now sell all over again. So you could add more sales. Maybe you could add maybe 150 lots now. Since they have closed their buy position, you could add 150 lots, right? So they could add 150 lots at this point here and take price lower. Also, obviously they're going to close this one. When buy got here, they might also do what? Close this, add a sell, and so close this, and then you see price continue exploding to the downside, right? So that is the same thing that happens here. So let's assume that the same thing was happening. Maybe the market was, buying, and then a bank tried to sell here with what, 50 lots, and they could not take price lower, right? So what did they do? The price was against them. They were negative all this move. So what do they do here? They come and they do the same thing. They come and they now sell with a bigger lot. So at least markets, that market moves based on orders, right? So they have to sell back here with a bigger lot, maybe to mitigate this loss. So now what happens is that the market eventually comes down to this point, and then when that comes there, what do? They close their positions, right, and maybe add more buys so that it will go in the initial direction which they planned, right? So you could always then you will have this, right? So 150 lot this time around, so 150 lots, they now buy back with 150 lots, and then they take price higher, right? So they take price now higher, right? So that's just the story behind smart money cubes, and you always find this happen in your charts, right? I will just teach you in a bit how to trade them. Now we have understood the story of how to trade all this, how to trade how it should look like, right? But I want to just make a disclaimer, because there was an institutional candle for me, doesn't mean that price must sell from here, right? Sometimes the markets can come and mitigate it and then just continue trading higher. I mean, markets could just continue trading higher, right? But I'll teach you how to filter this entries to make sure you profit from this knowledge, right? So let's clear everything on our screen, and then we continue. So now, when we have established that, so now how do we trade smart money cubes? When do we trade them, right? And the first thing you should do, you should know the trend of the market. And that's the first thing you should know. You should know the trend and the current range. And those are the two things to look at for the trend of the market and then the current range, right? So these are the two things to look at for before actually trading smart money cubes, all right? So now let's start from the beginning. So now the market was, buying or selling rather, And then at this point here, maybe somewhere around there, someone now tried, to buy this market, right? Someone tried, buy at this point here, maybe push price higher, and then, he was not able to do that, right? So he wasn't able to take price higher. So this is a blue candle representing a buy, right? Blue candles usually represent buys, right? So a blue candle here represented the buy, so you could not take price higher, and then you now saw what this happened. The market eventually sold down, and now remember that you are looking at to sell inside this smart money. If you want to join when they, you want to join them when they are mitigated out of their position, right? So let me send that to the back. Certain send. Okay. No, this is what I'm trying to. All right, so. All right, so we have that. All right, so we're trying to sell off this unmitigated candle in drawdown, right? That's a loss in billions or millions of dollars loss, right? So the trend, you're trying to sell it. So now, first thing, the trend, what have you identified? The trend is bearish. How do we know it's bearish? Because the market is making what? A series of lower highs and lower lows, right? If you're not familiar with that, just go to my YouTube channel and then just type markets. Just type this markets, right? Structure, right? Elektronfx. So you'll see our market structure videos, and there are so many of them I've done about them. Look at them, shift in market structure 102, market structure, like just all the bits I've made, making entries, kinds of markets. Just go through all of this, and you'll be able to enjoy our teachings on market structure, right? So you could just first say with the knowledge of market structure, you'll be able to establish your trend, all right? So now we have established your trend. Next thing you do, you look for the current range. Current range simply means the last lower high and the last lower low. So what do? You mark your last lower high. This is your last lower high, and then you do also mark your last lower low, right? That's your trading range, right? For a buy market, I'll just show you the reverse. If you're having a high, low, higher low. So your trading range for a buy market is simply what? The last higher low and the last higher high. So from here, right, to here becomes your what's trading range, just here, right? So this is it. Between here and here is the trading range, right, for a bullish market. All right, let's remove that. So now we have that. So what do? When the market is now coming into your range, right? Market should not go above here. So when the market eventually comes here, what do? You wait for what? A confirmation, right? There are two ways to actually get involved in this market, right? The first way to get into this market is that you just place a limit at the open of the candle, that is somewhere around there. I just place your sell limits at the open of the candle, right? Short position here, where your stop loss should be a bit above that candle, right? Just above the candle, maybe the wick of, if the candle had a wick, just above the candle, and then you're targeting the new low, right? The last low, right? So just giving an illustration on this and all of that. So you can just at the open of it and then targets down, or you could measure up the 50%. And how do that? You bring out your candle box or if Fibonacci 2, you measure from the open to the close, right? Then when you have done that, you go to the 50% of that. Just 50%, you place your sell limit at the 50%, where your stop loss still above the candle, and then you're targeting where down, right? So that is how to trade it. And then the final way you could do that, I'm not showing you 3 ways to trade it. Either the open of the candle, the 50% of the candle, or you wait out for what you call lower time frame confirmation. And still, you might want to go to Elektronfx, do the same thing, just type lower time frame confirmation, lower time frame confirmation, Elektronfx, right? Just type Elektronfx at the side, just search it on YouTube, you will find it, lower time frame entries, right? So you will just find that is the first video you'll see with this blue shady stuff, right? So just click on it, and it's about 17 minutes. You'll be able to understand how to make lower time frame entries with lower time frame structure and confirmation entries, right? So now when the market comes here, you're looking at for what? Lower time frame confirmation. That means the market should give the change from weak to strong hands. That means the market comes here, you want to say the market was giving this retracement stuff, you know, when you say market give that break of structure to the downside on maybe the 5 minutes or 15 minutes, right? So once markets give that break of structure, and then when you see that break of structure, you're not targeting the push up, right? Maybe the last candles or whatever, how you want to trade it. So you can't target this last candle, right? So let's make that orange. Right, so Cannot be targeting the last candle, right? And then when the good part about confirmation is that it reduces your stop loss. So when you're trading this, when the market comes back into maybe to form a new lower high, you're seeing your break of structure to the downside, right? So when the market gives a break of structure, right? So you have your BOS market clearing this last higher low. If you don't understand this, go to the video I just showed you. Go to my YouTube channel, type lower time frame confirmation Elektronfx, and that is it. You have the video, right? So when the market comes in, what do? You now short, right? Waiting for lower time frame confirmation kinds of saves you from losses, right? And you have now a smaller stop loss because stop loss where you should go above this high formed on the lower time frame instead of this overall high of the candle should just be above this particular high created by the lower time frame, right? And then you will have a better risk to reward. You can see that you're not having 1:3. Whereas if you are playing just the open without a confirmation, this two that we're giving you what you maybe have played your and SL here, they'll be having a 1:2, 1:2.4, right? A 1:2.4, that would have been 1:2.56, but for this, you're having this 1:3.31. You see that the lower time frame kind of confirms the move, right? So another reason why you should wait for the lower time frame is that sometimes the markets may give you a silly wick above that your area of stop loss, right? Let me explain that in a bit. So when the market comes there, the market may intentionally do this, may just go above that place a bit, maybe weak. You are using the limit, would have stopped you out here, and then before giving what a break of structure to the downside, right? This also happens, right? Markets may intentionally go above that point a bit before actually giving that break of structure to the downside. And when this happens, the draw. You wait for the markets to come to retrace into the candle, into your lower time frame structure, and then take price lower. So that is how to trade smart money keys for a bearish situation, right? So that is it's just the reverse for bullish situation, right? Just the reverse for bullish, right? Let us clear everything, right? All right, so it's just the reverse for bullish situation, right? So all right, so it's a reverse for bullish situation, right? So if the market, is bullish. Sorry, let me start over from here. So the market is not bullish, higher high, higher low, higher high, higher low, higher high, right? And then you notice that maybe somewhere around there, when the market made a new high, there was some kind of bearish move. Market tried to come down a bit, right? Someone tried to sell it, and then the person was not successful. And then you see inside that place, what happened? The market actually went higher, right? So you saw this, so the markets tried to go down, but still it went higher, made a new high, right? So now you can start the time that this market is bullish because you can see higher high, higher low, higher high, right? What do I mean? You can see the higher low here, higher low, higher high, higher low, and then a new higher high. So now when you have gotten all that, the next thing you do is that you establish your current trading range, right? So you mark your trading range, right? So you just mark the last lower high because that's the area of interest. It's the last higher low and the last higher high, right? So once again, if you don't understand this, go to my video on market structure. So when market comes in, right, into this area, right, you can extend this if you wish, extend that push down if you wish. So the market eventually comes there. What do you want to see? You can actually play it the three ways I illustrated in the first in the other example. So you can just play the open of it, your stop loss just above the candle, and then targeting the new high, right? That is it. Or you could measure the 50% of the candle, right? The 50% of the push down, this last push down, just measure 50% of it. You put your buy limits at the 50%, your stop loss still below, and then yes, or you could wait for what I call lower time frame confirmation, right? Lower time frame. That means the market has to do this. Maybe the market was retracing, giving some kind of bearish structure. Market finally comes there. You see, now see a break to the upside, right? So when you see this break to the upside, right, what do? You now enter the retracement, right? Maybe 50%. The last candle, however, let's go to my video and watch lower time frame confirmation. I want to go all over that all over again, right? So you see the markets come down, tap here, and then go higher, right? So that is how to trade with confirmations, right? So that's basically how to do this. Right, let us see if we can see just one example of where we spotted a smart money cube and how we would have played it, right? I am seeing something now. So look at this candle, look at this market, right? So this market was trending lower. So because just look at this point here, right? So this area of interest, you could see the market was bearish. Just one example. So see the market was bearish. I see low. So this, right? And then we could establish that our trading range was from where? Here, right? So our trading range from here down to here. And as you can see, there was a smart money cube. Look at it. So there, look at it here. This last candle up before the push down. So we have highlighted this whole candle, this last buy candle before the push down, right? So let's make that orange so you can see through. Right, orange is more visible, right? So markets came into this point. You can see that if you played the open, you would have still been safe on this. Look at it. If you put your limit at the open of this candle, right? Remember, stop loss should be above the candle it beats, and I'm targeting the new lows. You see that it would have been a very beautiful trade. If you also played the 50%, right? Maybe measured from the open to the 50, right? So just measure that and then targets 50% is 50%. We have seen that we have still gotten into the trade with a beta risk or reward ratio, right? So you see that you have gotten perfect entry, must 1:5. Those 1:5.3 trade. One time, if you're risking $10, would have been off $50, right? So this is a perfect example of a smart money cube, all right? So the perfect example of a smart money cube. You play that amazingly well, right? So you should always identify the structure and then look out for those candles of interest, right? I can even see one here. Look at another smart money cube here. So the market was bullish, as you can see, it was obviously trending upwards. So if I establish my trading range, I would say that it was from somewhere around the year, right? Then to all the way here. So there was no major retracement on this. So I was thinking, okay, from here to here, okay, let's say from here, right? So this was a high, low, and then impulsive move, right? So if you can see, there was a last down candle. You can see this last down candle before it went up, right? So you can see that if you played the open, right? Let's say as you played the open of this, although you did not really buy so much. So if you played the open of this, right? If you played your stop loss, your entry at the open, maybe somewhere around there. Sorry, that's wrong. So the reason for long, right? So if you play the open here, right? So we play the open, stop loss below. But like I say, you wouldn't have gotten the market actually gave 1:1.5. That was actually so large. Let's assume you play the 50%, right? Maybe you brought out your gun box too, and then you play the 50% of this. So you'd have played somewhere around the year, to stop loss still below. I've seen that you'd have made a 1:3, perfect 1:3. And let's assume you also waited for lower time frame confirmation, right? Let's assume you waited for lower time frame confirmation. Let's look at now. So the market also gave you lower time frame confirmation. Look at 30 minutes to see it clearly. Right, you see this more clearly on the 30 minutes time frame, right? It actually gave a lower time frame confirmation. Let's go back to that point. Right, so here. So look at that. So we highlighted the whole candle down. So you can see that there was a lower time frame confirmation. Look at this. You have a lower high, lower low, lower high, and then lower low. And the market actually gave that break of structure to the upside. So we had that break of structure to the upside, and then the market actually came into the last, the last candle. As you can see, if you played it, you would have made maybe a little. Let's assume that you played that, right? With the stop loss below. Let's assume you played the open of that. Let's see how much RR you would have made, although it did not actually go so far. Well, let's see that RR would have made. So if you played maybe the open of that candle, now remember your stop loss when you're using lower time frame confirmation, it's actually below the low that broke structure. So you are putting your stop loss just below here. And you have seen that you would have made 1:2.21, right? So I made the 1:2.21, and that would have been an amazing trade, right? So what if you measure the 50% of that candle? So if you measure the 50% of this, it would have been a beta RRR, right? So measure 50% of this, right? So 50% is the same thing goes. So if you played 50%, right, 50% of that candle, the stop loss just below the wick would have made 1:3.43, right? Or about 1:3.5 or thereabouts, right? 1:3.4, right? So that's how you trade the smart money cube, right? It's not foolproof, right? You should not over leverage on anything, right? This is not also to announce that our mentorship program is still ongoing and it is still $60, right? By the start of next month, which is the 1st of July, we are going to $70, right? So if you want to join, please use this, let me just give you, since you are watching this video, right, let me just give you guys a discount, just only you guys. I won't post it anywhere else, just on this video alone, just for you, right? So if you want, the mentorship program is currently running at, you know, I won't just give you a discount because you watched to this point of this video, right? So if you watch to the point of this video, because it has been quite long, so just give the discount EC3, right? So you give me the discount EC3, you will pay, right, $50 instead of $60, right? So if you can watch to this part of this video, 50% is going to be $50 instead of 60, right? So you have $10 off. Just give me a discount code, right? EC3. All right, so this is just come to my DM and say EC3. That is all. That's a discount code, right? That's the discount code. So you pay this instead of $60, right? And it ends by 1st of July. Ends 1st July, right? 2022. Right. Have a wonderful day. This is the last part of this video. I hope to see you in my mentorship academy. Follow me on Elektronfx on Telegram. Use the link in the description to join us, and then you can look out on our former videos, right? Have a wonderful day. Cheers and God bless.